New private home sales in Singapore fell in October for the third straight month. Prices also fell for the first time in 3 years earlier this year. Has the property market reached its peak after a bull run? And what does it mean for buyers and sellers? Well, to find out, I'm starting at one of the most popular new launches of the year. This is the sales gallery of Jayden, a towering development in the Jurong Lake district. It may be quiet now, but it certainly wasn't this way on launch day. Buyers snapped up 88% of the 368 units on day one. And it's not like it came cheap. The average price, $2,400 per square foot. Units like this, they're already sold out. Now this one is about 818 square feet of space. To put that into context, it's about 100 square feet bigger than the average 3-room flat. What does the popularity of this new launch say about the state of the property market after nearly 3 years of soaring prices? I decided to ask someone with 2 decades of experience in the property market. What's up with the demand at these new developments?
We are talking about mixed development, MRT right at the doorstep, and as well as amenities. And you know, Jurong is the second CBD. Good development at the right locations, the prices hold.
But experts caution this isn't entirely reflective of the broader market, where there are signs the COVID-induced property boom is moderating. In 2021, private home prices jumped more than 10%. The increase the year after was more than 8%. That number has come down to 3.9% in the first 9 months of 2023. Property portal Property Guru says that the uncertain economic outlook and higher for longer interest rates have weighed on demand. Its demand index fell by more than 14% quarter on quarter in Q3.
Agents are telling me that it takes a longer time now for a buying decision to be reached. And there's a fair bit of back and forth between seller and buyer. There is a price moderation. And in this price moderation, it is because of the prevailing circumstances that are being faced by property seekers. The geopolitical tension doesn't help. The high interest rate environment remains very real because it is about the financial ability of property seekers to repay their loans. And of course, post ABSD, even investors have to consider whether they should let go or divest one of their properties in order for them to meet their tax obligations and buy the next property.
Buyers can also afford to be more selective as the supply of new private homes has increased. But market watchers say that may not mean prices will take a dip.
And there are many reasons to that. In fact, we have witnessed some of the recent land bid has also been in a record price for an executive condominium. And overall construction costs have gone up. GST is also on the rise come January next year. And therefore, putting all this together, I don't think the developers have much leeway to bring down the price. And I expect the prices to remain resilient. But the consolation here is this: we are not expecting the prices to run away on a double-digit growth, likely muted growth of about 3 to 5% at best.
What opportunities are there for buyers in such conditions? One possibility are executive condominiums, especially for HDB upgraders.
And the reason for that is because executive condominiums are priced a tad lower than comparable private residential condominiums. Not only that, they have CPF housing grant, and they are also able to opt for a deferred payment scheme. So the initial cash outlay would be less than if they were to buy a private residential condominium. And then they could leave the rest to completion. Yeah. And they have ABSD remission upfront. So even though they are still currently living in the HDB flat, they can sell it upon completion of the executive condominium, and they do not have to pay ABSD upfront.
Those priced out of new homes could also look towards the private resale market.
I think you'll find value in the resale market and you can pick up a unit that you like. Because the new supply is very limited, right? It has been pushing the frontier in terms of the price, on the price point. But on the resale market, it's trying to play catch up. So that gap, it's slightly to widen.
With rental prices expected to soften in 2024, those looking to buy property for investment should consider the impact of higher interest rates first.
And also, although I think that rents are expected to come off next year, they are coming off from a high base, and I don't think they will pull back all the way to where they started off at the beginning of 2022.
On the seller's side, it might be a bumpier road ahead, so those who can afford to wait to sell should do so.
I believe the seller would have to relook at his or her expectations. There's going to be a lot of pressure on selling price, especially, for example, the HDB minimum occupation period. There's going to only be 13,000 flats that will meet this MOP in 2024. Unlike yesteryears, in the years 2019 to 2022, there were between 25,000 to 31,000 MOPs. So there's going to be a keener competition because it's a smaller pool of upgraders. And so sellers can be prudent to price it in a way that will appeal to property buyers.
Whatever you buy next, whether you're downgrading or you're upgrading, it's going to be expensive, right? So no point lowering your price to try to get into the move to the next property, and you lose out on that little, the opportunity cost in that sense that you gave in to the buyer.
Ultimately, buying property is an emotive and expensive undertaking, and like all investments, comes with risk.
Bottom line, what's your budget? Are you comfortable? And can you sleep peacefully after you've committed and hold on to the property for at least next 5 years and beyond?